Stocks are one of the most popular investment options available to individuals. When you purchase a stock, you are essentially buying a small piece of ownership in a company. As the company grows and becomes more profitable, the value of the stock can increase, allowing you to earn a return on your investment. Investors can research different companies and choose stocks that they believe will perform well, based on factors like financial health, industry trends, and leadership. However, investing in stocks can be risky, as the stock market can be volatile and the value of stocks can fluctuate based on a variety of factors. It's important to carefully consider your investment goals and risk tolerance before investing in stocks, and to seek the advice of a financial professional if you're unsure about where to start. Bonds are another popular investment option that investors often use to diversify their portfolios. When you invest in a bond, you're essentially loaning money to a borrower, which can be a corporation or government entity. In exchange for this loan, the borrower agrees to pay you interest over a set period of time. Bonds are generally considered to be less risky than stocks, as they provide a fixed income stream and are typically less volatile. However, not all bonds are created equal. Some may be more risky than others, depending on the creditworthiness of the borrower. Investors should carefully research bonds before investing and consider factors like credit ratings, maturity dates, and interest rates. As with any investment, it's important to consider your investment goals and risk tolerance before investing in bonds, and to consult with a financial professional if you're unsure about where to start. Real estate investment trusts, or REITs, are a popular way for investors to gain exposure to the real estate market. A REIT is a company that owns and operates income-producing real estate assets, such as apartment buildings, office buildings, and shopping centers. When you invest in a REIT, you're essentially buying shares in this company, which allows you to own a portion of the underlying real estate assets. REITs provide investors with a way to earn rental income and potential capital appreciation without the hassle of owning and managing real estate properties themselves. Additionally, many REITs are publicly traded, making them easy to buy and sell on stock exchanges. As with any investment, it's important to carefully research REITs and consider factors like asset quality, location, and management before investing. It's also important to consider your investment goals and risk tolerance, and to consult with a financial professional if you're unsure about where to start. Investing in commodities like gold, silver, and oil can provide diversification to a portfolio and serve as a hedge against inflation. Commodities are raw materials or goods that are used in the production of other goods or services, such as oil used in the production of gasoline. When you invest in commodities, you're essentially buying a stake in the underlying asset itself. Unlike stocks and bonds, commodities don't generate interest or dividends. Their value is based solely on supply and demand. This makes commodity prices more volatile and subject to fluctuations based on a variety of factors, including global events, weather patterns, and production levels. Investing in commodities can be a way to diversify your portfolio and protect against inflation, as commodity prices tend to rise when the cost of living increases. However, it's important to carefully consider the risks associated with commodity investing, and to consult with a financial professional if you're unsure about where to start. Cryptocurrency, such as Bitcoin and Ethereum, has gained popularity in recent years as an alternative investment option. Unlike traditional currencies, cryptocurrencies are decentralized and operate on a blockchain network, which makes them more secure and transparent. Cryptocurrencies are not backed by any government or financial institution, and their value is based solely on market demand. This makes cryptocurrency prices highly volatile and subject to fluctuations based on a variety of factors, including global events, regulation, and adoption. Many investors see cryptocurrency as a way to diversify their portfolios and hedge against traditional financial markets. However, investing in cryptocurrency is not without risks, and it's important to carefully consider your investment goals and risk tolerance before investing. It's also important to conduct thorough research on different cryptocurrencies and to seek the advice of a financial professional if you're unsure about where to start. Alternative investments, such as hedge funds, private equity, and venture capital, are investment options that are typically not available to individual investors. These investments are often reserved for accredited investors or institutional investors, who have higher net worth and a greater understanding of the risks associated with these investment options. Hedge funds are investment funds that use advanced investment strategies to generate high returns, while private equity and venture capital funds invest in private companies and startups, respectively. Alternative investments can offer higher potential returns, but they are also subject to higher risks and can be less liquid than traditional investments like stocks and bonds. If you're interested in alternative investments, it's important to thoroughly research these options and understand the potential risks and rewards. Consulting with a financial professional or investment advisor can also be helpful in determining whether alternative investments are right for you. Exchange-traded funds, or ETFs, are a popular investment option that tracks a specific index or group of assets. ETFs are similar to mutual funds, but they trade like individual stocks on stock exchanges, providing investors with increased flexibility in buying and selling. ETFs offer a cost-effective way to diversify a portfolio, as they provide exposure to a range of asset classes, such as stocks, bonds, and commodities, with lower fees than traditional mutual funds. ETFs also offer the advantage of transparency, as investors can easily see the underlying holdings of the fund. ETFs have become increasingly popular among both individual and institutional investors due to their convenience, diversification benefits, and low fees. However, it's important to consider the risks associated with ETFs and to carefully research the underlying holdings of the fund before investing. As with any investment, it's also important to consider your investment goals and risk tolerance, and to consult with a financial professional if you're unsure about where to start. Mutual funds are investment vehicles that pool money from many investors to invest in a range of assets, such as stocks, bonds, and other securities. Mutual funds are professionally managed by a team of investment experts who make investment decisions on behalf of the fund's investors. By pooling money together, mutual funds can offer individual investors diversification and access to a range of asset classes that may not be available otherwise. Mutual funds also offer the advantage of convenience, as they can be easily bought and sold through a brokerage account. One of the main benefits of mutual funds is their diversification, which helps to spread risk across a range of assets, reducing the impact of individual investments on the overall portfolio. However, like any investment, mutual funds are not without risks, and it's important to carefully consider the fees, investment strategy, and past performance of a mutual fund before investing. It's also important to consider your investment goals and risk tolerance, and to consult with a financial professional if you're unsure about where to start. Options trading is an advanced investment strategy that involves buying and selling contracts that give the holder the right, but not the obligation, to buy or sell an underlying asset at a specified price on or before a specified date. Options can be used to speculate on market movements or to hedge existing investments. For example, if an investor owns a stock and is concerned about a potential downturn in the market, they can buy a put option, which gives them the right to sell the stock at a predetermined price, protecting their investment in case of a market decline. Options trading can be complex and requires a good understanding of the risks involved. Investors should carefully consider their investment goals, risk tolerance, and the fees associated with options trading before getting started. Additionally, it's important to note that options trading is not suitable for all investors and may not be appropriate for those with a low tolerance for risk. If you're interested in options trading, it's important to thoroughly research the topic and consult with a financial professional before getting started. Sustainable investing is a growing investment strategy that seeks to invest in companies that prioritize environmental, social, and governance (ESG) factors. This approach has become increasingly popular in recent years as investors seek to align their investments with their values and make a positive impact on the world. Sustainable investing offers investors the opportunity to support companies that are making a positive impact on society and the environment, while also potentially generating competitive returns. Sustainable investing can take many forms, including investing in companies that prioritize sustainability, divesting from companies that engage in harmful practices, or investing in funds that focus on sustainable investing. It's important to note that sustainable investing does not necessarily mean sacrificing returns, as many companies that prioritize ESG factors have shown strong financial performance over time. If you're interested in sustainable investing, it's important to carefully consider your investment goals and risk tolerance, and to consult with a financial professional who can help you navigate this complex and rapidly evolving investment landscape.